Now, welcome back. This, of course, the big story of the day. Tens of thousands of jobs are potentially at risk as the 30% US tariff on most South African imports takes effect tonight at midnight. Now, South Africa's agricultural and automotive industries are expected to be among the hardest hit. The United States accounts for 7.5% of South Africa's global exports. And to help us discuss what this impact could potentially be on local business, we joined by the president of the Black Business Council, Elias Monage, and also by independent analyst Khaya Sithole. Gentlemen, good morning and thanks so much for your time. And perhaps, Khaya, if I could just start with you, listening and looking at the responses coming through from our question of the day that speaks to this particular matter. People feel that we shouldn't be too concerned about what's going on and we should just look elsewhere for other markets. But, what does this actually mean when these tariffs come into effect tonight? How is it going to impact South Africa and South African businesses?
Good morning and good morning to the viewers. So unfortunately, we cannot afford to pretend that everything is normal. So in an instance where the tariffs do kick in, there will definitely be knock-on effects. And obviously, the biggest knock-on effect is going to be on those particular businesses that have a much higher reliance on the US market as a destination for their goods and services. And what will happen, particularly with those businesses, is that they obviously have to now try and establish and figure out whether their customers on the other side are still willing to be able to accept their goods, with the understanding that obviously the transaction price is going to be a bit higher now with the 30% tariffs in place. So that's the big issue here. But I think it's also quite important for us to then think about the resultant effect on the South African local economy. So those businesses that are transporting goods to the United States are goods that are using South African value chains, that are using South African logistics chains in particular. So naturally, if there's now a diminished appetite for your goods and services in the US market, then whoever you were using in order to get your goods to the harbor from wherever you are, whether it's the citrus businesses, whether it's automotive businesses, now suddenly the volumes that you're trying to ship are not going to be the same. Now suddenly there's someone who was reliant on your business to be able to ship your goods to the harbor, whether it's in PE or Cape Town, or whether it's in Durban, who's now going to be told that actually we don't think that the volumes that we traditionally ship with you are going to be the same. So therefore, let us hold back until we kind of know what the market looks like on the other side. So there's definitely going to be knock-on consequences for the local economy.
Elias, from your side as the Black Business Council, what has been your assessment of what the potential impact would be in the immediate, short and medium term?
Morning, Sakina, to you and to the viewers. I guess we need them to look at this thing in a context that companies that they export their products across various subsectors of the economy, whether it can be agriculture, it can be steel, it can be automotive, it can be components, it can be pumps, it can be various other products that derive from steel, they will be severely affected because if in whatever form you look at this thing, regardless of the percentage of the business that they export to the US, by virtue of imposing the 30% tariffs on their products, it basically means they need them to relook at business somewhere else in terms of diversification. And the diversification is not something that will then take effect tomorrow or next week, Monday. It then requires market information, looking at the trends, doing the research, looking at the price issues, looking at the standards and the regulatory environment that you need then to send your products to. Equally so, it will also then affect the small, medium enterprises because in the main, you then find the small, medium enterprises, either they were supplying the bigger companies so that their products then integrated into that production process or in the supply chain. So this will be a major implications or impact that will have to our industries across, whether it's from the automotive, from steel, it's from the guys that they supply certain components to the rail infrastructure in the US, whether in the petrochemical industry. So it's a mixed bag of companies and industries that will be affected, let alone in agriculture. Also, they will be severely affected because if their market was only in the US, it then means they need then to look at somewhere else. So these are the broader implications. But equally so, we have seen how the Department of Trade and Industry and Competition and DERCO, they are looking at establishing export support mechanisms to those companies that will be affected. But equally so, we need then to look at the market intelligence in various other areas so that we are not only then looking at the US, but how do we consider and look at other markets? And some people they might then say, but we have BRICS. And again, even if we then look at BRICS, we then look at Africa Free Trade area, we still need then to look at various market segments and the replacement of those products from US and to those new markets in terms of the pricing, in terms of the logistics, in terms of the standard that are required by different countries. So these are some of the issues that it will have a major implications, let alone the question of employment locally, because companies are not going to be idling if there are no markets for them in the US, because I don't think that those companies in the US will be willing then to pay an extra amount to caution the 30% tariffs imposed on the exports from South Africa.
So just picking up on what Elias has mentioned, and he said quite a bit there, Khaya, with regard to protectionist policies, you start, of course, now hearing people, because everything's becoming a lot more acute, that perhaps the South African government is not doing enough to protect local industries, but also on the Africa Free Trade area, looking at that and looking at the tariffs imposed on other African countries, especially in our immediate vicinity, and how that's going to impact them and impact us in return. Can we just talk about that for a minute?
Yeah, so I think the big tension point that always exists in the question of how we want our trade policy to be is a simple question of, well, do you want to protect jobs, or do you want your South African citizens to be able to afford goods and services from wherever they come? And obviously, if you get that wrong, if you simply then enable other countries to be able to flood your market, your South African citizens will be able to get those goods and services much cheaper, but it comes at the cost, the displacement of South African local jobs. And I think every single country tends to struggle with that. And obviously, we live in a world where there are countries that have much higher volumes of labor that they can be able to deploy, and they're able to produce goods and services for much cheaper than we can. And I think probably China is the one example that people cite a lot. Now, obviously, whether our trade policy should be responsive to that and should be able to avoid and prevent that from happening, that's something that our government needs to be able to deliberate on. But I think obviously in the immediate term, what we need to be able to try and figure out is that, well, when you now have this obviously big problem statement that has now been visited by the United States, are there particular ways in which we can support businesses that are currently in that particular value chain to be able to transition into either finding a way of getting their goods and services to the US market at a much lower price so that they remain competitive even with the tariffs in place, or do they then seek to find alternative markets? And obviously it's important for us to acknowledge that these businesses have not been ignoring other markets that were there for ready for them to exploit, but as Elias said, it takes some time to be able to understand the market intelligence associated with alternative markets in order to then identify whether you do have the right goods and services for that market, and also then whether you can be able to get your goods and services to that market competitively. So it's not an overnight process. It requires people to deliberate and to be able to figure out whether their business model or their business investment case stands scrutiny in those alternative markets. So that's really the big challenge that all of these businesses are facing over the next couple of months in particular.
And, Elias, just coming back to the issue of our neighbors, the Africa Free Trade Area. Not so long ago, we had soldiers die in the eastern DRC. And now we turn around and we see Rwanda and the DRC now, suddenly coming together. Seems the US is now taking the credit for forging peace around that particular area. And again, in terms of our mineral exports, and it seems as though South Africa is almost being iced out, given our frosty relations with the US, if one could call it that.
I think, Sakina, we need then to look at this thing also differently, where the Department of Trade and Industry particularly with our brothers and sisters in the continent, where the department moved very slowly. Zimbabwe imposed tariffs on steel on us. And I'm saying if we are part of the Africa Free Trade Area, you have Zimbabwe that have imposed tariffs to South African steel products, the 30%, even before the US. You then have Kenya that have done the same, Tanzania, and various other countries in the continent. And again, we then required the Department of Trade and Industry and Competition to move with speed. And they're not moving with speed. And that's part of the problem. Secondly, in an event where you then have other countries in the continent that they bring their products in South Africa and they impose tariffs, there are two things. It will be a dumping claim because the price of origin, where it originates from, is less than what they're sending to South Africa. And we have seen this thing in recent past where number of products that were coming into our shore, they were basically under invoice. Under invoice basically means that the price that they're bringing it here is less than what they're selling in their respective countries. So that is tantamount to dumping. And if the department, they're moving very slow, if the custom officials are moving very slow, it basically means that our markets will then be flooded. And when the markets are flooded, it then means companies in that space will basically then have a problem with their products because they're not going then to sell it. And anti-dumping claim need then to be improved. And once you identify an anti-dumping, it then means DTIC and relevant institution, they must then impose an interim tariff while they do the investigation. But if again they move very slow, it then becomes much a bigger problem for the industry. Secondly, if again the point that you are raising that we tend to move very slow as a country in dealing with issues. For example, on the peace initiatives that you mentioned on the DRC and in various other countries, if the US, they've managed then to convene a meeting of heads of states in the continent, and for I guess they're playing the divide and rule, and we are part of the same tariff regime in terms of the Africa Free Trade Area, it then means, again, we're then sleeping. And when we're sleeping, somebody will then take our lunch. And this is exactly where we are now because we're moving very slow. We tend to do things in a long, tedious process, and that creates a major problem because we're not responding quicker enough. So there are certain areas and incidences where we then expect the government to move with speed, expeditiously, so that the response time, if it's quicker, it then caution the impact and the implications of our respective sectors. And equally so, you then look at the reset of the so-called trade policy between South Africa and the US. Again, as a country, we will score our own goal because when people left the country and went to the US, they caused a damage not only to government, but to the citizens and to the country at large. And we're then taking this thing very cagey and casually so, because the implication is now being felt. The 30% on tariffs, and even on other products, not even 30%, it's 50%. If you then look at the stainless steel and various other products. So this is a huge program that we are faced with.
It certainly is. Unfortunately, we are out of time, but no doubt this will be the conversation throughout the day. Elias Monage, president of the Black Business Council, and independent analyst Khaya Sithole, speaking to us about that 30% tariff imposed by the Trump administration coming into effect at midnight.